Thank you. Good morning, colleagues, the grade 10 learners, all in the Free State. My name is Ntombi Mehlo, the Subject Advisor of Business Studies from Motheo District Office. We are going to be talking about the business studies today, the topic which is the forms of ownership. Thank you. If I may start now, I will start with saying every time when you wake up, you don't just wake up and say, I'm going to do these things. You need to plan. Planning is very, very much crucial in life and always in business and everywhere. You don't just wake up and say, today I'm going to wear this. You have to plan, what is it that I'm going to wear? So the same with business. Today we'll be talking about the forms of ownership. Thank you. So please, grade 10 learners, be very, very much careful and listen attentively so that you'll be able to ask your teachers from the schools where you are about the things that I'm going to talk about if maybe you need some clarity. Why the business forms of ownership today is because I looked at the ATP, the annual teaching plan. So I know that at this moment, which is week 5, we are busy with the forms of ownership. And this topic, to be honest, the grade 12s are struggling with it. Hence, I've decided that we must do the forms of ownership, but fortunately enough, we are now busy with it. So please pay attention. Thank you. Can I start, Memir? Okay. As I told you, the forms of ownership is the topic for today. And I told you that you need to plan in everything that you are doing. You don't just wake up and do anything. Therefore, when you have to start a business, there are factors that have to be considered when choosing a form of ownership. Today, we're going to talk about the different types of forms of ownership. We've got different types of them, but I will mention them as time goes on. But what are the factors that are to be considered when choosing a form of ownership? One of them is the size and the nature of the business. What do we mean by the size and the nature of the business? It depends whether are you going to go for the small business or the larger one, or rather companies, let me put it like that, the bigger businesses like companies or the sole traders. It will depend. And also the nature of the business. And another thing that you have to consider is the way in which business is controlled and managed, that is management. Who will be managing your business? Like I've said, if it's a small business, probably you might get someone to manage it on your behalf. But if it's a bigger business, the board of directors will be responsible for managing. Those are the things that you have to ask yourself first. You don't just say, I've got money now, I'm starting my business. What kind of a business are you going to start? The size of it, the nature of it. Is it going to be a company or a smaller business? Capital. How capital is it going to be raised? How are you going to raise your capital? We know that if it's a small business, it will be from your own pocket, or you have to go and borrow it from the bank or financial institutions. And you have to consider things like how profit and losses will be dealt with. How profit and losses will be dealt with when sharing, talking about the sharing of profit. If you are alone, we know very well that obviously all the profit will be yours. But if you are in a partnership or maybe in a close corporation, it depends. Then you'll have to decide on how is it going to be shared. And then you also have to consider things like who is responsible for any debts made by the business. We talk about the liabilities. We know that, okay, I know that you have already started with this topic with your teachers. When we talk of liabilities, we know that if it's a sole trader or a partnership, the liabilities will be unlimited, meaning that you'll be in trouble should it happen that you borrowed capital from the financial institution, then you are not able to pay it. Then in that case, that is a negative impact on your business. And then we'll also have to consider the implications for profit and by the business, because we all know that the objectives, or rather the goals of starting a business is nothing else but to make a profit, and not just a profit, but a maximum profit. So you have to look at the implications for profit and by the business. And you have to look at the lifespan of the business, which we call it a continuity. Like I've said, we know that in a sole proprietorship, which is also known as a sole trader, there is no continuity. Sometimes other books, they will say limited continuity. So in that in that case, we have to look at all those kind of things because they might have an impact in your business. You also have to consider the vulnerability of the business in terms of the lawsuit, that is the legal person. Some businesses are legal entities, others are not legal entities. All those things have got an impact. Some of them, they've got negative, some they've got a positive impact. Therefore, that is why we're saying when you have to start a business, we have to consider the factors to be considered before choosing the form of ownership. You don't just wake up and say, I'm starting a sole proprietorship or whatever. And again, we'll have to look at the differences between the profit and non-profit companies. Like I've said, as a sole person being alone, you can start a business, which is known as a sole trader. But then let's talk about the differences between the profit-making companies and non-profit making companies. The profit-making companies is established for only one reason or rather aim, which is nothing else but to make profit. And the memorandum of incorporation is set out who the directors and shareholders are, as well as their rights, their duties, and the responsibility. Like I've said, if you're alone, and then it will have actually like to be clear to you that you'll be the person who will be running the business yourself, or you'll get someone to run it on your behalf. But if maybe it's businesses like companies, like private company, public companies, like I've said, they direct. The board of directors will be managing the business. They will know their rights, they will know their responsibilities as well as their duties. And we also have a company incorporated for financial gain for its shareholders. That is a profit, what you call a profit-making company. But a non-profit-making company are those businesses that are established for charity purposes in order to promote social as well as cultural activities, meaning that they have to do with the community. They are there to assist those who are in need. And the memorandum of incorporation defines the purpose of its operation in a non-profit making companies. A non-profit company is an association incorporated for no gain. Their intention is not to make profit, but is to assist other people. Now, let me start with the forms of ownership. Like I've said, we've got different kinds of forms of ownership. We've got the sole trader, a partnership, close cooperation, personal liability company, private company, public company, the state-owned company, the non-profit company, as well as the cooperatives. Now, for you to choose a form of ownership that will be suitable for you, that will be able to run it effectively so, we have to look at characteristics as well as the advantages and the disadvantages. Why? Because I'm going to emphasize this grade 10 learners. In grade 12, this topic we are doing it in grade 10, grade 11 up to grade 12. But how can I put it? The disadvantaged in grade 12 is that the time allocated for that topic is not enough for the teachers that will be able to do all the characteristics, the advantages, as well as the disadvantages. Therefore, make sure, learners, that at this grade, at grade 11, you study it thoroughly and know it. Do not cram it, but you must learn and study it with an understanding. Now, we are going to start with the first one. Like I've said, it will depend on time. We've got a number of them, but I'll start with the sole proprietorship, which is also known as the sole trader. It is very much important for you to know the characteristics of them. And if you know the characteristics, automatically you will know, because in grade 12, they will never ask you based on what are the advantages or what are the disadvantages. They might ask you, what are the success and the failing factors? Therefore, in grade 10, you have to make sure that you know the advantages as well as the disadvantages of all these forms of ownership. Good. Now, what is a sole trader? The definition of the sole trader. A sole trader is nothing else but it is a business that is owned and managed by one person. The business owner handles everything, including the activities of the business, its processes, as well as the decision. Now, coming to the decision, remember you are alone. When you have to take a decision, there will be advantages as well as disadvantages. The advantages is, it is very quick for you to take a decision. But the disadvantage is you might take a decision that will take your business down the drain because there is no one to advise you. So hence I say the characteristics will show you what are the advantages, what are the disadvantages. Hence in grade 12 they will say what are the success and the failing factors. Now the definition, continue with the definition. Sole proprietorship or rather sole trader, it is the most suitable for service businesses such as doctor, hair salons, electricians, and etc. Now let's come to the characteristics of a sole trader. A sole trader, the owner, because we said a sole means one, he's only one. The owner can sell the business to anyone at any time, meaning that he can take decision at any time if he feels that now, or she feels that now she's no longer interested in that business. She can sell it. There's no one that she or he has to consult. There are no special requirements when the owner wants to close the business. There are no special requirements. The owner has a personal interest in the management and the services that is required. I'm going to emphasize on this one. The owner has a personal interest in the management. Obviously, if maybe that is what the money that I've started the business with is from my own pocket, I'll have to make sure that I pay more interest in the business and make sure that I serve my customers in the right way so that they should come back. Hence, they say the owner has a personal interest in the management of the business that is rendered. There are no legal requirements. Going back to bullet number 2, when I say there are no special requirements when the owner wants to close the business. Now, bullet number 4 says there are no legal requirements regarding the name of the business. They won't say, or like in a close corporation where they say at the end of the name there should be those suffixed CC, if it's a private company, P2Y, LTD, public company, LTD, and etc. But in a sole trader, that will be my name or whatever name that I come up with, and there is no any legal requirements regarding the name of the business. That is the characteristics of the sole trader, sorry. And another characteristics is that it is easy to establish that kind of a business as there are no legal formalities in forming the business. It is easy to establish it as there are no legal formalities in forming this kind of a business. The owner provides his own or her own capital, saving or borrowed money from the bank. Like I said, there are disadvantages and advantages. If you've borrowed the money and the business is not becoming the way you wanted it to be, is not successful enough, then unfortunately you've got unlimited liabilities. The owner is personally liable for the debts of all that company. I would like to emphasize that unlimited liability. The owner has unlimited liability, meaning that the owner is personally liable for the debts of the company. The unfortunate part is that they will take whatever that belongs to you, to that business. If it happens that they don't get their money, let's assume you borrowed the money from the bank, then they will take all what worth it from your own, meaning that your personal asset, your house, your cars, everything. Why? Because you borrowed money from the bank. That is the disadvantage of the sole trader. A sole trader, okay, it lacks continuity. What do they mean? Should it happen that I pass on or you pass on in that business, therefore, there is no continuity. It has no continuity. The continuity depends on the life and the health of the owner. Some learners will, I know, they will ask, no, my kids will take over. But now, according to the characteristics, it says it depends on the life and the health of the owner. It has no continuity. That is another disadvantage, but we'll talk about the advantages as well as the disadvantages. Sole traders are not compelled by law to audit their financial statement. Sole traders are not compelled by law. Unlike private company, public companies, and the others, they are forced, or rather they are compelled by the law that financial statement need to be audited. We know that there is a lot of corruption. We do watch televisions, we do read newspapers and listen to the radios. We know about the corrupt which is taking place. I will never mention those companies, but we all know that. Therefore, in a business, there should be auditing of the financial statement. But in a sole trader, fortunately, you are not forced to do the auditing of the financial statement. Now, like I've said, we've got advantages as well as the disadvantages. Some of the advantages, while I was doing the characteristics that I've said initially to you, when you can study the characteristics thoroughly, automatically we'll see which one is the advantage, which one is the disadvantage. In grade 12, which one is the success and which one is the failure. Now, the advantages of a sole trader, which is sole proprietorship, quick and easy decision can be made. I've already mentioned that one when I was dealing with the characteristics. Quick and easy decisions can be made, but the disadvantage, no one is there for you to advise you whether you are taking a right or wrong decision. You'll only realize when your business is down the drain, which is not something that we want. Because when we start business, we spend a lot of money. Therefore, we have to be very, very, very much cautious and be very much careful based on the decision that we'll be taking. Another advantage is that no legal processes and requirements. I think I've already explained that one when I was dealing with the characteristics. It requires a little capital to start. Remember, it's a small business. It's just a small business. Therefore, it won't require a large capital where you have to sell shares, issue out prospectus, where you invite the public to come and buy shares so as to raise capital. But you can borrow it from the financial institutions or it can be from your savings. But remember the consequences of the money borrowed from the financial institution. The owner takes all the profit. That is the advantage. You don't have to share with anyone else. All the profit belongs to you or belongs to the business. There is personal contact between the owner and the customers. Why? Because it's a very small kind of a business. Therefore, you've got a personal contact with your customers. Sole traders are generally closer to their clients or rather their customers. Like I've said, kind of business that can be a sole trader, that can be the doctors, hair salons, you name them. Hence, I say sole traders are generally closer to their clients or customers. Now, if you may allow me to continue with the disadvantages of a sole trader. Like I've said, in everything, we've got the impacts. Now, we know that when they say, what are the impacts? It's either the negative or the positive. We'll talk about that kind of a question of the impact because most of our learners, I'm sorry, but it's like that. Most of our learners, they lose marks because when they ask you, what are the impacts of maybe a sole trader? You'll find that the learner, she or he only knows the advantages or the success factors. And then she will write, maybe the marks is 10 or 12 marks. She will write 3 and then she will leave a space for the disadvantages. Learners, listen. If the question says, what are the impacts? As long as it did not state what are the negative or as well as positive impacts. But if they say what are the impacts, you can write all the impacts which are positive or the impacts which are negative. You'll get your full mark. But then, unless the question says, what are the negative, then you have to give us the disadvantages or the unsuccessful factors, or rather, whatever that we call it. We'll come there. Now, the disadvantage of a sole trader, unlimited liability. That one, my learners in grade 12, they like that question. They will be asking, what is the difference between limited and unlimited? Why do I have to keep on actually referring to grade 12, whereas I'm speaking to the grade 10s? It is because this topic, it's actually supposed to be done in grade 10, grade 11, up to grade 12. But surprisingly, you'll find that learners in grade 12, they don't have a background about it. Hence, I'm emphasizing it here in grade 10 because this is the basic. Like I've said, the teachers do not have enough time. The allocated time is not enough for them to do all the characteristics and everything. So please, when you have to study the forms of ownership, study it thoroughly from grade 10 and from a grade 10, know everything about it. Unlimited liability, like I've said, they will take even your private assets. Even if the dog, if it's worth it, they will take it. I'm just joking, but yeah, they will take everything that's worth it to get their money back. Which means that the owner is personally liable for all the debts and losses suffered by the business. The growth of the business can be restricted. Why? Because of the lack of capital. Remember, the capital is limited to what actually you are contributing, to what you have saved, or maybe you have borrowed. So you don't have opportunities like the companies, like private or public companies where you can issue out, sell the shares in order to raise the capital. We'll talk, if time allows us, there is a difference between private company and a public company, because we know that a private company, when they raise shares, they issue out prospectus inviting the public to come and buy shares in order to raise their company, to raise their capital, I'm sorry to say that. But the private company, they can only sell shares to the members of the company, meaning that they cannot sell outside the business. So those are the things that you have to consider before you start a business. That is why I said you don't just wake up in the morning and say, I'm starting a business. Okay. The owner is responsible for providing all capital needed, which it might be difficult for him or her to raise a big amount. If the owner does not have enough knowledge, enough experience, then the business, unfortunately, will never be successful. Yes, it will be successful like, you know, the fire made out of boxes. It will be like, phew, and down. So we need in business the sustainability of a business. You don't have to like start a business whereby after 2-3 years is gone. Hence we say we need to plan. That is why in grade 10, we only also teach you about the business plan. You don't just wake up and say, I'm starting a business. We are running away from those businesses that are not sustainable. A sole trader, which is one of the characteristics there above, which is the disadvantage, Lex Continuity, I've already said that, especially in the event of the death of the ill or in the event of illness. Difficult to attract highly skilled and knowledgeable employees. Why they say it's difficult to attract highly skilled and knowledgeable? Why? Because you'll never have money to pay them. Unlike in a private and a public company, those companies with not having enough capital to pay that particular person, how are you going to pay that person? Therefore, hence they say it will be difficult to attract highly skilled and knowledgeable employees because they need a lot of salary. That is the disadvantage of a sole trader. I hope and believe, but I know because I looked at the ATP, the annual teaching plan, and I realized that because we are in week 5, we are busy with the forms of ownership. I know that due to this situation of COVID, we've got this, what you call the rotation system. Some of the schools, they are not on par. You might find that some, they've not yet started with the topic, but it was supposed to be started in week 4. This is the week 5. Hence, I've told myself that when I get time, I'll come and finish it up. But then the difficulty of a sole trader is nothing else but to attract highly skilled people who will be making sure that your business is going to be successful, and not only successful, but sustainable too. That's it about the sole trader, which is owned by only one person, which has got its advantages as well as its disadvantages. Learners, please take this into consideration. If you know the characteristics, it will be easy for you, sometimes even if you do not know the advantages and the disadvantages. But if you know the characteristics, then you'll be able to answer the questions. It's really so painful that when you get a grade 11 learners not understanding this. But then please, grade 10 learners, let us start now. Study it, because you are going to continue with it up to grade 12. If you allow me, I'll start with a second form of ownership. That is partnership. Now, you need to know their definitions, like I've given you the definition of a sole trader. Now, we are going to talk about the definition now. What is the definition? The definition of a partnership. What is a partnership? Partnership is nothing else but an agreement between two or more. I'm ending there. Some other books, which are outdated, they might say partnership consists of 2 to 20. Remember, now we've got some amendments. It's no longer like that. It's not only about partnership. Even the private company, the public company. Before, the private company, if I'm not mistaken, yes, the private company, it used to have 1 up to 50 members that are allowed to start a private company. But due to amendments, it's no longer 1 to 50. Now it can be started by 1 person, an unlimited number. It will depend how many people. And then coming to the public company, remember it was like not less than 7 can start a public company. It was like that before the amendments. But after the amendments, even 1 person can start a public company. It can be 1 up to unlimited. But now let us concentrate on the partnership. The partnership also is no longer 1 up to 2. We find learners on grade 12 who are still writing partnership consists of 1 up to 2, up to 2, up to 20. And then sometimes you'll get learners saying 1 up to 20. Then you ask yourself, what is partnership when they say 1? It can't be 1. 2, we are partners because we are 2. So partnership consists of 2 up to unlimited number. I'm emphasizing these learners because we come across this as teachers. 2 and more people can form a partnership with a common goal. Partners, they share their responsibility of business and they share the financial and management decision of the business. Wow. It's unlike in a sole proprietorship where you are alone, the responsibility is upon you, the finances upon you and everything. But in a partnership, partners, they share the responsibility of the business and they share the financials, they contribute money. We will talk about how do they contribute. And in terms of the decision making, unfortunately, in the partnership, you cannot just wake up in the morning and take a decision. You need to consult. Now, what are the characteristics of a partnership? Okay, characteristics of a partnership. There are no legal requirements in starting a partnership. The same with a sole trader. Except, what do I mean about except? Except in the drawing up of a partnership agreement. When you draw a partnership agreement, then they have to be like, you have to sit down and state, how are you going to run the business? How are you, who's going to manage? How are you going to share the profit? Therefore, we call it a partnership agreement. In that case, then, when drawing up a partnership agreement, is then where you have to consider the legal requirements. There are no specific suffix. I've already explained out what do I mean about the suffix. Remember, the closed corporation, we write the name of the business and then the end will be CC. The private will be the name of the business and P2Y Ltd and etc. But in a private company, like in the sole proprietorship, there is no specific suffix to be reflected in the name of the business. That is the characteristics. I think you already see the advantages now. Partners, they combine capital, and they may also borrow capital from financial institutions. I wonder, but we'll talk about this one. Or what will happen if they've borrowed the capital and they are more than 20 and the business is not going to be successful? We'll talk about that. Partners, they share the responsibility and they are all involved in the decision making. Hence, I said, you cannot wake up in the morning and just decide, this is what I'm going to do. You need to consult. No legal formalities to start a partnership. Only a written partnership agreement is required. Like I've said when I was starting with, when I said except in the formation of the what? Partnership agreement. No legal requirements regarded in the name of the business. I think I've already mentioned that one. Partners have unlimited liabilities and are jointly and severally liable for the debts of the company, which is a disadvantage when the partners have got unlimited liabilities, because they will be responsible for anything that is done, even if it can be taken by one member, but unfortunately, they will be jointly, severally liable for that, or rather, they will be accountable for those debts. That you should know. Partners has no legal personality and therefore has no continuity. It lacks continuity. Learners will be surprised and they will be asking, why, ma'am? Because they are not only like in a sole trader. It's understandable in a sole trader that when he or she passes on, there is no continuity. But in a partnership, those are the questions that we actually come across when we are in class. In a partnership, even if you can be 20 or 40 or whatever, if one passes on, therefore you have to sit down. Remember, when like drawing the partnership agreement, then we have to sit down and do it again. Hence, they say there is no continuity. The partnership does not pay income tax. Only partners in their personal capabilities. What do you mean by only partners in their personal capabilities? Some other books, they will say the characteristics. Other books, they will say, in terms of the tax, the partnership, the business, which is known as a partnership, they are not taxed. Other books will say they are only taxed once. Then you'll find learners being confused about that. We know that in companies they are double taxed, but in a partnership, they are only taxed once. Why? Only in their personal capacity. Any money that comes into your pocket, it needs to be taxed, but then the business is not taxed. Then coming to auditing, Auditing of the financial statements, we know that where there are two or more people, there will be conflicts. And especially when there is money, disagreements and all those kind of things. Auditing of financial statement in a partnership is optional. We are not forced to. It is optional. It will depend whether you want your books to be audited or what. Partners, they share the responsibility, and they are all involved in the decision making. Different skills of partners can be used. Different skills of partners can be used. Those are the characteristics of the partnership. Remember, I said some of the characteristics, they become the advantages as well as the disadvantages. Let's look at the advantages, because I'll keep on referring you back to the characteristics. So remember, characteristics number so and so. This is what they mean. Now let's look at the advantages of a partnership. Partnership are relatively easy to establish. I've already explained that one during when I was treating the characteristics. They are easy to be established. There are no formal requirements for the creation and the running of a partnership. It is easy and inexpensive to establish, even with the written agreement. That is the advantage of starting a partnership. And then the workload and responsibility, that is the advantage, is shared amongst the members. Unlike in a sole trader. In a sole trader, you are a jack of all trades. We have to do all the 8 business functions. You still remember them, the business functions, because we started them at the beginning of the year in term 1. The business functions like administration, you'll be responsible for administration, responsible for public relations, you have to be responsible for purchasing, for production, you name them. So the workload and responsibility in a partnership is shared between the partners. That is the advantage of the partnership. Partners, they share responsibility for decision making and managing their business. The partners are able to put their knowledge and skills together and to collectively make the best decision, depending whether are they all interested in that one. Because remember, we are going to talk about the disadvantages, because sometimes they don't contribute equally. And I know very well that myself, if I did not contribute like the other one who contributed, maybe let's say 50,000, meaning I've contributed 10,000. I won't have that much interest. Why? Because I've got not that much to lose. Yes, 10,000 is a lot, but I've got not that much to lose. And I'll also know that the one who contributed more than me, he or she will pay more interest. And unfortunately, when coming to the sharing of the profit, we'll see. It will depend on how they decided or when they drew the partnership agreement. But they are going to share equally. That's a disadvantage, but yeah. Now, coming that to the partners, each partner can focus on their own individual strength when sharing the workload. We know that you will never be like a master of everything. You might be good in this line and other one in this one. So if you are 2 or more, then those partners can focus on their own individual strength. You know where your strength is, so that you can make the business to be more successful. Then you concentrate on that one. But unfortunately, not in the sole trader. Raising additional capital is another what you call advantage of a partnership. Raising additional capital to finance business, to further finance the business expansion, it's very easy. If you feel now you know you're making a lot of profit, we can expand expand our business. Then it will be easy for you to raise the capital, unlike in a sole trader, because there is no limit on the number of partners who are allowed in the business. Partners are not compelled by law to prepare audited financial statement. Remember, we said it is optional when we're talking about the auditing of the financial statement. They said it is optional. So the partnership, they are not forced, or rather they're not compelled by the law to prepare audited financial statement. Another advantage of partnership is that partners are taxed in their own capacity. Like I've said, learners, all what is in the characteristics, if you can study those characteristics thoroughly, then it will be easy for you to know the advantages as well as the disadvantages. By merely studying the characteristics, you can take out what is the advantage for the business and what is the disadvantage for the business. Those were the characteristics. Can we take just a 2 minutes break? We'll come back. Thank you. Okay, thank you. Welcome back, grade 10 learners. Hope you understood everything that I said about the forms of ownership. Like I said, you don't just wake up in the morning and say, I'm going to start a business. You have to consider certain factors before. So now we're busy with the advantages of a partnership. But because of time, I think for today, we'll only do these two forms of ownership. But as time goes on, we'll try to come and finish up the others because we know everything is about time. Now, the disadvantages of the partnership. Now, partners, the disadvantage is that, they might not all contribute equally. I've said that during the characteristics. They might not all of them contribute equally. That is the disadvantage. Now, let's come to the sharing of the profit. How will they share? Then we'll see. Because the disadvantage is that they might not all of them contribute equally. There can be a lack of capital because not all of them will actually contribute equally. There can be a lack of capital and cash flow in that business. That is a disadvantage. Another disadvantage of a partnership is that discussions between partners can slow down the decisions. Remember, we said one of the advantages of a sole trader is that you can take a quick decision. Why? Because you're alone, no one to consult. But in a partnership, you need to consult. You don't just decide and then this is the decision that you are going to take. You have to consult with your partners, and unfortunately that will slow down the decision making, meaning that the decision making will be time consuming, that is what we say, or will be a waste. But then for you to take the right decision, you need to consult because you are not alone, but we are partners. And they may disagree on important decisions. Not all the decisions will be taken. Sometimes it will depend who came with the decision. It will depend. We know whether there are two or more people. There will always be conflict. In larger partnership, the partners may struggle to agree on business issues. Like I've said, where there are two or more people, partners may struggle to agree on business issues. That will also delay taking a decision in that business. Another disadvantage of a partnership is that different personalities, as well as options of partners, can lead to conflict and disagreement. There will always be conflict and disagreement. You know, even at home, with your own brothers and sisters, meaning that your siblings, there will always be conflict and disagreement. Now, what about in a business where you don't even know each other, but you became partners just because of the objective of making profit? Oh yes, there will be conflicts and disagreement where there are two or more. Now, another disadvantage is that partners are jointly and severally liable for the actions of the partners. I emphasize, partners are jointly and severally liable for the actions of the other partners. Like I've said, during the characteristics, to me, it sounds like I'm repeating one and the same thing, but it's not like that. I mentioned that during the characteristics. Now, this falls under the disadvantages. Why they say they are all liable for their actions? One decision or whatever that you can do, it binds the others. I can go alone to the bank and borrow money using the name of the business. Then, unfortunately, for the others, you will be liable for the actions that I've taken, unless you'll be able to prove that you did not send me, but it will take some time. Partners is not a separate legal entity, and therefore, partners are liable for the debts of their own capacity. Each business partner is legally responsible for the liability of the partnership. Like I've said, I cannot take a decision alone. Should it happen that I go to the bank and use the business name and borrow money, unfortunately, you'll be fined unless you prove that you did not send me. They are liable for the debts of the company, jointly so. A partnership, another disadvantage is that it has unlimited liability. Grade 10 learners, it's a repetition of the characteristics. If you can go thoroughly to the characteristics of the forms of ownership, like sole trader, you go through the characteristics, you go to the partnership, you learn all you study all the characteristics. Even if you did not study the advantages and the disadvantages, by merely just thinking and sitting down, if the characteristics, the partnership has unlimited liability, it tells you that it's a disadvantage. Why? Because the liabilities, they'll go to the private assets of the partner, meaning that they'll take whatever that belongs to the partners. That is a disadvantage of forming a partnership. Hence, we said, when we started, I'm going to take you back I'm going to take you back to those factors to be considered when you start a business. Factors to be considered when starting or when choosing a form of ownership. Like I said, you don't just wake up in the morning and say, I'm going to start a business. You look at all those advantages and disadvantages and find out which kind of a business will be suitable for me before. If ever I say I'm going to buy shares from Telkom, do I know the advantages and disadvantages of buying shares from Telkom? I should not only take like decision early in the morning and say I'm going to buy shares from Telkom. Yes, that is part of investment, but you have to investigate first. Whether in terms of the liability, is it going to be a limited liability or an unlimited liability? Fortunately, we know that in a private company and as well as in a public, in companies, let me put it like that, the liabilities are limited. Therefore, unfortunately, remember I said unfortunately, but though I say liabilities are limited is an advantage. But the unfortunate is all the money that you have invested in that business, then it's gone. But then you'll only forfeit or rather lose what you have invested, but it will never come to your private assets, unlike in a sole trader and a partnership. Now let's go back to the disadvantages because we're busy with the disadvantages of the partnership. I'm sorry to take you now and then back. Why? Because I've emphasized to you that most of these advantages and disadvantages, they are from the characteristics. And why am I also taking you back now and then? It's because I want to show you that you don't just wake up and start a business. You have to consider those factors before. Now, partners is not a separate legal entity. I think I've explained that during their characteristics. And therefore, partners are liable for the debts in their own capacity. Now, the question is, if I may ask you, you learners, will you go for a partnership? Will you go for a sole trader? Yes, I may, because there are also advantages as well as disadvantages. But I'll look at the options before I can decide. Hence, it's very much important for you to look at those factors to be considered before choosing. A partnership, it's like I'm repeating, but it wasn't the characteristics. A partnership has unlimited liability, which means that partners, they risk losing their personal possessions. Partners risk losing their personal possessions. Because of what? Because of unlimited liabilities or liability. Partnership lacks continuity. If one partner dies or retires, the remaining partners need to sit down and draw up a new partnership agreement. Remember, I told you that other learners, they'll keep on asking, but ma'am, it's not only one, but there are two or more. If one passes on, why do they have to start afresh? Why does it lack continuity? It's because they need to draw up a new agreement. Remember, that agreement, partnership agreement, was drawn when that partner, before she retired, or maybe passed away. So they have to come up with a new one. Now, another disadvantage is the changes or transfer of ownership. The changes or transfer of ownership can be difficult, and generally, it requires a new partnership to be established. You don't just do anything the way you like. Profit, when it comes to profit, I've been waiting for this, are divided between the partners according to the partnership agreement. How do they share the profit? Profit is divided between the partners according to the partnership agreement and not according to the income distributed. Is it an advantage or disadvantage? It is a serious disadvantage because I've contributed 10,000, you contributed 20,000. But now, it depends on the partnership agreement. What did we say? If we said we are going to share equally, then fortunately for me, then I'll benefit a lot. So that is a disadvantage of profit, of the partnership in terms of the sharing of the profit. They don't divide the profit according to the way they like or according to what you have contributed. But when it coming to the division of the profit, it will depend on the partnership agreement. How did they agree? Is it going to be shared equally or what? Then I think I'm done with the disadvantages. I might not have done all of them, but I know that the teachers will do the rest. But then I'll give you some other things after I've done this. But based on time, I can see that I won't have enough time for doing the close cooperation. But let's go to the differences between the sole trader and the partnership. What is the difference between the two of them? Remember, we say a sole trader is a business that is owned by one person, managed by him or herself. But when it comes to a partnership, it is an agreement between two or more people who combine labor, who combine capital, who combine resources towards what? Achieving their common goal, which is nothing else but to make a maximum profit. I underline maximum, not just a profit, but a maximum profit. Now, what is another the difference between the two? Quick and easy decision can be taken in a sole trader because he or she is alone. But unfortunately, in a partnership, discussions between partners or discussion between partners can slow down decision making, and they may disagree on important business decisions. That is the difference between the two forms of ownership. Those things are very much important, learners. Please take them into consideration. They might sound like we are repeating one and the same thing, but then please, you need to know them because they'll ask you, give us the differences between maybe sole proprietorship and the close corporation, or sole proprietorship and the whatever, any form of ownership. Those are the things that you need to know. Another difference is that if the owner does not have enough knowledge, unfortunately, if the learner does not have enough knowledge or experience in the business, then the business will never be successful. The sustainability, we'll never talk of the sustainability in that kind of a business because the owner lacks what? Knowledge as well as experience. But in partners are able to put their knowledge, they're able to put their skills together to make collective what? Decisions. Though the disadvantage is that it's delaying, but the advantage is that at least they are collectively taking the decision. They own the decision that they've taken, even if they disagreed. Hence we say it's slow to take the decision, but they will sit down and argue, conflict, disagreement, but then at the end of the day, they come up with a collective best decision. Those are the differences between the two forms of ownership. Based on time, I think we'll end up there, but then let me highlight some few things because I was going to start with the close cooperation. Remember, we said in a sole trader and the partnership, there are no legal requirements in terms of the name. But in close corporation, at the end of the name, there should be the suffix that is CC. But now, due to amendments, we know that things are changing now and then. They are no longer allowing anyone to start a business like a close corporation. But we still do have the close corporation, those that were opened before the amendments. But now they don't allow it based on the laws and legislations. We know that legislations, they've got an impact in the businesses. If I may take you back to the business, business environment. Am I right? Yes. The business environment in terms of the micro. We know that you cannot take decisions. And in a micro, other decisions taken by the state or whatever, they've got a negative impact in the business. So I'm not going to talk about those things, but then I was just highlighting you that close corporation, this nowadays, they don't allow anyone to open it. But for today, I think that will be all. And then I'll send these notes to your teachers so that you go through them. These notes, they are not for the teachers, learners. You should listen carefully. The teachers will try their best. We'll try our best to give it to our learners. But what is important, it's not that you as learners, you are doing the teacher a favor by studying. You are doing yourself a favor because it will be easy for you when you come to grade 12. That's it for today. Let me just give you some tips on the question paper. Question paper, no. Don't think I'm going to give you what you call you'll see other learners, they say, what is the scope and whatever. No, not the scope. But I'm going to give you a structure of the paper. When it comes to the paper, when we talk of paper 1, remember then we are now writing paper 1 and paper 2, unlike before where we're writing out of 300. Now, fortunately, we are writing out of 150 for paper 1, 150 for paper 2. The topics that are in paper 1 will be business environment as well as the business operations. Therefore, if ever you are going to prepare yourself and you know very well that on this day I'll be writing paper 1, you should know that which topics to refer to. You don't have to study everything. And then coming to paper 2, the topics which will be asked in paper 2, that will be business roles as well as business ventures. Those are the most important things that you need to know, because learners, they'll just go study everything, study the book. Can I emphasize another thing? I know we used to tell our learners that they should use the previous question papers. But these days, due to COVID, some of the topics have been trimmed, meaning that they've been removed. Your teachers, they know better. Don't just take the book and say, I'm not going to go to class. What's the use of going to class? It's a waste of time. I'll study at home. You'll end up studying something that is not going to be examinable. So it's best because your teacher knows what have been removed, what is supposed to be taught or not. So it's always advisable to use the examination guideline. I just hope that all the learners, they've got the examination guideline, because it's very much important. If you've got examination guideline, I mean, you've got the questions, because the examiners, when they said, they take the examination guideline, they sit down with it. They will never ask questions which are not appearing in the examination guideline. So examination guideline, it's advisable for you learners to use it, even in class. Because sometimes as a teacher, maybe I might be like, I've forgotten, and come up with a topic that is supposed to be treated, and then skip another subtopic of that particular topic. Then as a learner, you can say, but ma'am, under this, you haven't treated this. Take, for example, we're dealing with the characteristics, advantages, and disadvantages. Maybe I forget to do the partnership disadvantages. And then when you've got the examination guideline, it guides you that what is it as a learner that you're supposed to study. So it's very much important that as teachers, we should give our learners grade 10, 11, and 12 the examination guideline. Thank you very much. We'll see next time when we meet again. But please, you must know the different types of forms of ownership. Don't just take a decision, but know very well what will be the advantages as well as the disadvantages of choosing that form or kind of a form of ownership. Thank you. Thank you. I wish you all of the best, grade 10s. Thank you very much.